Hello fellow stackers, 365 here, welcome back to my channel. So in today's video we're going to do something a little bit different, and we're actually going to have a look at the price charts of silver. Now this is something that I have no idea how to read properly. I'm not sure exactly how to read candlesticks or anything like that. So I've actually asked for the help of Camel Finance. Now for those of you that haven't heard of Camel Finance, I will put a link to his channel in the description of this video. He's a professional swing trader. He's been trading for many years now, and on his YouTube channel he's very open and honest, and he shows you when he makes profit, when he makes losses, when he buys, when he sells, and it's just really interesting to see a different side of investing. Now, as always, I want to say thank you very much for those of you that watched this video. I want to say a huge thank you again to Camel Finance for putting this video together for my viewers. I also want to say thank you very much to Creative Precious Metals, because he's the person that introduced me to Camel Finance's channel in the first place. I'm going to hand you over now to Camel Finance. I hope you enjoyed this video. Let me know what you think of it in the comment section below. And as always, thanks very much for watching my videos.
All right, hello. My name is Camel and I'm a pro trader. So my job today, hopefully, is to give you an introduction to charts. I want to show you how I use charts as a pro trader and how anybody, given a little bit of knowledge, can get a much better average on their silver stack. First of all, I'd like to say a massive thank you to 365 for having me on. So thank you, 365. So whether or not you are a stacker, whether or not you pay attention to charts already, it's my belief that any investor, whether that's stocks and shares, whether that is silver and gold, should at least have a fundamental understanding of how to read a chart. And the reason for that is simple. If you can recognize certain things in charts, you can save yourself a lot of money. You can end up getting a bigger stack for less money. And you can quite simply and easily learn to identify when the price is about to reverse a downtrend and start an uptrend. So like I said, I'm going to try to give you a little bit of an introduction to how to read a chart. I'm going to keep it nice and simple so it's available to everyone. And hopefully if I do my job properly, you should be able to find some value here and also get better at getting your average price for your stack down towards the lows. And you should be able to use a couple of tricks that I'm going to give you to make sure you can identify when a downtrend is over so that when you buy, you are immediately into profit. So before we go any further, I just want to say a couple of things. Who am I? Well, first of all, my name is Camel and I'm a pro trader. I have coming up on 13 years experience doing this full time. I also have a YouTube channel. You can find me at Camel Finance on YouTube. I spend around half my time talking about Bitcoin, and I spend the other half of the time showing you what trading looks like in the real world. I call out all of my positions ahead of time. I show you every single win, every loss, and even own my mistakes as and when I make them, as I continue to try to uphold the highest possible standard of YouTube traders. The whole thesis for my channel is there's a lot of people out there that claim to be traders. There's a lot of people out there that are very good at telling you they made money after the fact, right? But my biggest thing is if you're really a trader, show your positions, call them out before you even enter them, point at the levels at which you're going to take them. And then if you get stopped out, if you're wrong occasionally, which of course you will be in trading, then make sure you show that as well, right? I want to be really clear here and make sure that you understand this is just because I am a trader. This is not me trying to sell you some snake oil. This is not me suggesting that by the end of this video, you'll be able to quit your job and be a trader. I would actually advise the majority of people not to try to be a trader. Most people will be able to outperform themselves by being a long-term holder rather than trying to be a trader. It is incredibly difficult to be a trader. It takes tens of thousands of hours. So please do not interpret this as me suggesting that everybody should stop dollar cost averaging and accumulating assets and instead look to be a trader. But I do strongly believe that as investors, as long-term holders, and particularly as stackers, having a fundamental understanding of how to read a chart and how to use that chart can give you a massive advantage over standard dollar cost averages and can help you significantly outperform your current strategy. I know a lot of stackers like to go on bullion sites and check the charts, and typically what you'll find is they are all in these sort of line charts. Whilst one option would have been to do this entire video using a line chart like I've got here, as a trader, I almost never use a line chart. So because I use candlesticks, let's keep this as real as possible. But overall, candlesticks or a line, it doesn't make a great deal of difference here. So here's a very simple diagram of what these candlesticks actually mean. For a green candle, the bottom of the body, the bottom of the candle here, is the price at open of that day. And then the top of the body is the closing price of the day. Any candles that have wicks to the up or downside. You can have no wicks, you can have one to the down, you can have one to the up, or you can have both, and they can be very small or they can be very, very large. It doesn't matter. All it is the top of the wick is the high of the day and the bottom of the wick is the low of the day. So again, for the body of the candle, the bottom of the body is the price at which the market opened up. The top of the green candle would be the price at which the market closed for the day. And the wicks represent the highest price of the day and the lowest price of the day. For a red candle, it's almost exactly the same, except we've opened up here, we've moved down, and this is the close, right? So it's just the same, but upside down. This still remains the highest price of the day, and this still remains the lowest price at the wick. But for a red candle, the open is the top of this body and the close is the bottom. And for a green candle, the open is at the bottom of the body with a close at the top. So there are a lot of nuances, there are a lot of subtle pieces of information inside of candlesticks, but for long-term accumulators, for long-term stackers, you don't really need to know any of that. To give you one quick example of the sort of nuances that lie inside of these candlesticks, for example, if we've got a red candle here, you can see we open here, we close only slightly lower, but the fact that it has a giant wick to the upside tells us that we opened here, then the price ran all the way up to the top, only to then reverse in the middle of the day and finish slightly lower than it opened. So a subtle tell from a candlestick such as this would be that there's a lot of sell side pressure that showed up in the middle of the day somewhere. Similarly, if we had a green one like we've got on the left here, you can see we opened at the bottom, we only closed marginally higher, but at some point in the day we were up massively and sellers must have stepped in to pressure and reverse the price back down, making us finish significantly below where the ultimate high of the day was. So this is just one example of these nuances that exist within candlesticks. In terms of long-term stackers, long-term investors, it's not something I would worry about personally, since we're going to be looking at much longer time frames, much bigger trends, and we'll be much more interested in capturing much larger moves. So in the interest of not going too far down the rabbit hole today, we're going to zoom out a bit and take a look at how to look at these charts. So I think what I'm going to do here is I'm going to show you where to get a chart, how to set it up, how to use it, everything you're going to need to know. Then I'm going to show you the difference. I'm going to show you the difference between the dollar cost average strategy and this simple charting technique that you can use to get your average down and therefore make sure you get a bigger stack for less money and significantly outperform the dollar cost average strategy. Then once I've given you that, once I've shown you how to use that, I'm going to show you a live example that I currently have open. I currently have an open trade on silver, so I can show you how it looks working in real time. And then I think for a little bit of bonus content, I'm going to give you my opinion on where the price of silver is going in the short to medium term and in the longer term, looking out towards, let's say, the end of the decade. So the first thing you're going to need is a charting software, of course. Now, there are absolutely hundreds available. Some of them cost an absolute fortune. Many of them are free. Some of them are better than others. My personal favorite is this one right here, which is tradingview.com. This one is completely free and it does absolutely everything I think most people will need for free. They do have upgrades available if you decide you need to get more out of your charting software, but I would think for 99% of the population, this will be absolutely sufficient. A couple of things to know about this is if you want to find silver, you can type in silver, but what it's going to do, because the go-to pair for silver is silver against the dollar. So if you type in silver and click this, you're going to get silver priced in dollars. If you want to find silver priced in pounds, what you will need to do is type in XAG GBP, and then you'll be able to find one of these: silver against the pound, silver against British pound, silver against the British pound. So it's as simple as that. Once you've clicked it and loaded up your chart and you're happy with it, if you want to add it to a watch list, you just hold Alt and press W on your keyboard and it will add it to the watch list. If you're on a mobile, then you'll have to go down to the watch list tab at the bottom and then click the little plus. Once you've created your watch list, once you've got your silver, you're pretty much ready to go, right? If you want a line chart, then you can change that up here just by clicking on line and you can have your line chart. I prefer the candlesticks, as I've already said. The other thing to point out, a word of caution here. There's, for some reason, and I did this myself in the early days, for some reason, people get very, very drawn to zooming in on the time frames. So this is a daily candlestick chart, which means every single one of these candles denotes the price action in one day. If I jump down though to a 15-minute chart, for example, now absolutely every single one of these candles represents 15 minutes of price action. Okay, so for some reason, people get really sucked into zooming in and trying to find lower time frames and higher time frames and all of this stuff. My number one piece of advice, particularly for long-term stackers, would be select the daily chart and stick to it. Okay, you really don't need anything other than the daily chart. That's the number one piece of advice when it comes to this charting software. Stick it on the daily time frame, leave it at that. If you really insist on playing around on different time frames, the thing to do would be to go up on the time frames, not down. So you could look at a weekly chart, and all this means is every single one of these candles now denotes one full week of price action. The reason I say to zoom out and not in, i.e. to go up the time frames such as towards the weekly or the monthly chart versus going down, is the higher the time frame, the more significance the chart has. If you zoom into a 15-minute candle, the things that happen inside of 15 minutes really do not matter, particularly to long-term investors. So like I said, the number one piece of advice, stick it on a daily time frame, leave it at that. If you really insist on playing around with other time frames, then you can use the weekly or the monthly chart. But for me personally, as a pro, I almost never use anything other than the daily chart. We will also be needing one tool for this. So there's a trend line tool right here. All it does is draw trend lines, as you can see. If you go into the tools, you can select trend lines. There's a bunch of different things you can draw, but like I said, you're probably going to need a trend line. You can change the color and do whatever else you need to do with it, but realistically, it's the ability to click on the trend line and connect the tops of the price that is going to be the focal point of how to get your average down, as we'll get to in just a minute. So once you set up TradingView, once you're familiar with it, once you've added silver to your watch list, it's time to start seeing how we can use these charts to outperform our current DCA strategy, how we can use a couple of simple tricks to add to our stack without having to spend more money than is necessary. And to illustrate this point, if I hop into this silver chart right here, you can see that I've got a bunch of red arrows and a bunch of green arrows, okay? So each one of these red arrows starts on the month. And the reason I've done this is I wanted to show you where your entry would be if you just assume that we get paid at the first of the month and we add to our stack, we DCA into silver, right? So if you do so, then every one of these red arrows denotes the day that which you would buy on the first of the month when you get paid with a monthly dollar cost average, okay? And if I keep scrolling along, you can see that sometimes we're buying high, sometimes we're buying at the very top, and sometimes we're buying towards the lows. Overall, of course, the magic of dollar cost averaging is it's going to even out the price. We're going to get an average price of the entire range. But it's important to point out that there are many times where we buy and the price declines immediately after. We buy and the price declines immediately after. We buy and the price declines immediately after. We are buying, in many instances here, we are buying local tops, including all the way up here, all the way up here, all the way up here, as you can see. So whilst, yes, the average is fine, whilst there's absolutely nothing wrong with dollar cost averaging, and whilst, like I said at the start of the video, many people will be able to outperform most traders by simply dollar cost averaging and holding for the long term. But if I go back to the start of this range since about July of 2020, and we look at these green arrows show you where I would have been buying using a simple technical analysis trick. Now, what you'll notice is a few things here that are key differences. First of all, the majority of these buys are very close to local lows. Okay, as you can see here, close to the low, close to the low, close to the low, close to the low, same all the way through, right? The other thing you'll notice is not once did I buy a major local top. Nowhere near buying up here, didn't buy any of these tops here, didn't buy this top, didn't buy this top, or this one, or this one. Again, close to the lows, didn't buy the top, didn't buy the tops, close to the lows. And you'll also notice that in almost all of these cases, after these buy signals are given, the price goes up immediately thereafter, right? Buy signal given, price goes up immediately thereafter. Same again, same again, same again. Price goes up, then rolls over, but we buy again, price goes up immediately, rolls over, and then we start this big uptrend. Again, I'm buying here, and we're moving all the way up here. We're not paying for elevated prices at the top. We're buying at the low, prices immediately in profit. So right off the bat, you're probably thinking, well, what kind of sorcery is this, right? But if you stick to the end of the video, I'm going to show you how anyone can do this, and it really takes almost no skill whatsoever. The skill is in developing this strategy, but as I'm going to show you, it's a very, very simple trick, and anyone can do it using this free TradingView software. There's one final point to make here, and that is that you'll notice the amount of red arrows, which is one purchase every month, vastly exceeds the number of green arrows. So what this also allows me to do is save a bigger cash reserve ready for when the price is at an attractive level, ready for when the price is ready to reverse and move higher, ready for when the price is much closer to the bottoms than at the tops. So not only am I averaging into my position at lower valuations, but I'm going bigger at the lows and I'm saving my capital at the highs so as to not buy tops only to watch my investment decline shortly thereafter. So how does this work? Well, the first thing I'm going to do, just to make it clearer, is I'm going to get rid of all these red arrows, going to move these up and out of the way. So now we can see what's going on. I'm going to grab my trend line and I'm going to start by connecting the highs, extending the trend line out, as you can see. So I've made a touch here, multiple touches here, and I drag this line all the way across. Now I'm going to repeat this all the way across the chart. We grab this high, we connect it to the next highs and extend the line all the way down. Here is another one connecting the highs and the highs and the highs. Here, you can see the same deal, touch, 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 touch. Same again, right here, and here, and here, and all the way through, right? I'll add these in, I'll save myself, keep saying here and here and here again. And so now I've added all of these lines in, you could probably see where this strategy comes into fruition, right? You could probably see where these buy signals come from. As the price closes a daily candle above the trend line, that is the buy signal that produces the green arrow. So you can see underneath the red line until we get close a daily candle above the red line, and that becomes the buy signal. It's the same here. First green candle outside the trend line produces the buy signal. First one here, and here. And as you can see, all the way through. So this is how we can use a simple trend line strategy to let us know when the downtrend has reversed, and also notice that by keeping a lid on price, by using the trend line to connect all of the tops, we also at no point end up buying, like I said earlier, the upper portion of this range. So you can see it really is as simple as that. If I hop into my silver chart, this is the one I use for my YouTube channel. This is the one I trade from actively. All of these blue ones where entries taken, and so this is what it looks like in real time. Now ignore this red line, I'll get rid of this just to make sure we're clear, but this is an example of what this looks like in the real world. So as we were putting in this current downtrend, I drew this blue line and I was saying over and over again ahead of time, once we break out, once we close a candle outside of this range, outside of this trend line, excuse me, then it will be time to go long. So because it's a trade, I have to have a stop loss. Of course, if you're just using this simple strategy to dollar cost average for the long term, then you won't be so worried about this. Of course, this doesn't really apply to physical bullion either, since you have to pay the VAT on it. But from a trade perspective, I have a stop loss below the local low and we go long and we see what the market can give. So this has been a rinse and repeat trade for me over and over and over again. And these absolutely do work in real time. I was able to call this out ahead of time, as I said, and now we're sat in this trade and we'll see what the market can give. I do expect this price to move higher over the next couple of weeks. So hopefully you can see my point by now, right? Hopefully you can see that just by grabbing yourself some free charting software and grabbing a simple trend line to connect the highest prices and wait for an established downtrend to be broken with a daily close above that trend line, you can vastly outperform the dollar cost average strategy where you just get paid once a month and then add to your stack. Now, of course, there's absolutely nothing wrong with dollar cost averaging, but hopefully you can see that this very simple trick that's taken no time at all, no input, no investment into this, right? You just grab yourself some free software, draw a trend line, and you can get your average down. Hopefully you can see that this is just one simple technique that investors can use to vastly outperform your average person that doesn't know how to look at a chart. So I hope you can see that it's certainly worth getting to know some charts. It's certainly worth keeping an eye on some charts. As promised, I'm going to run through more of a deep dive TA for you now on where I think the price of silver is going in the short, medium, and the long term. So it's important to point out, I haven't pointed this out yet today, but it is important to point something out. The price of silver, as I'm sure you stackers are well aware of, okay, is well defined inside of a range. So that range is in here, right? So what do I mean by range? What I mean is the price really hasn't done anything apart from go sideways, has it, for many, many years. And arguably, if I extend this line back, you know, the price hasn't done a great deal for even longer before, right? You can see if I keep extending this back, we've been around these price levels for a very, very, very long time. And I'm sure many of you, particularly if you've been stacking for a long time, are wondering, is the price ever going to break out? Is it ever going to be time? Well, I personally think it is, and I'm going to show you why. If I zoom out to a weekly time frame, and the only reason I'm using the weekly time frame is the daily literally doesn't stretch all the way back there. I have to keep scrolling like this, right? But if I scroll all the way out and I connect a trend line to the top
of the ultimate high, the all-time high for silver, back at around $50, and then I drag it all the way across, you can see that we have got a massive, an absolutely massive, I'm going to go back on the weekly so we can actually see what's going on. You can see we've got this absolutely massive downward sloping trend line. The bigger they are, the more important, the more statistically significant they are. This is absolutely enormous. This is like a decade, right? This is over a decade of falling, descending resistance that is laying on top of here. Now, I think the price has been coiling for long enough. I think we've spent long enough in this massive range. We have been compressing the whole time, and we are soon, in my opinion, due to break out above this. Now, if we can do this, we are naturally going to run into some resistance, right? We're naturally going to get people that want to target $30, which was the first red horizontal line that I drew, right, up at around $30. We are inevitably going to get some level of resistance, some level of price reaction once we get to the top of this range. But if we zoom out and look at the much bigger time frame, then what you can see is we've got a massive, massive downward sloping red resistance line right here. We're not that far away from breaking out of it. And once we can clear that, there's only one more hurdle in the way, and that is that $30 range. Okay, so I really think that silver has a much better chance than ever before at getting above this first downward sloping red resistance line. So I would think we can see $30 silver probably by the end of this year. It would not at all surprise me if we are trading above $30 by the end of this year. The way trading works is once we get a decisive move above the top of this range, above the top of this $30 level, we will see 50 become the next target. I am currently of the opinion that we are soon going to crack and break out of this downward sloping red resistance line, targeting this $30 top. And once we can crack that, which I believe will come towards the end of the year, I do see $50 coming shortly thereafter. With trading and investing, it's always best to take things one day at a time. It's always best to be open to all outcomes. If we go all the way back to 1974, we can see we had another one of these big ranges, right? We were trading inside of this range, something like this, right? This is where we were trading inside of our range. I could maybe move this down a little bit. And we spent a very long time in here. But what you can see is as we got up to the top of this range, we of course got a natural reaction there, and then we truly broke out. And once we broke out, what came thereafter was a massive, massive, massive upside rally for the price of silver. So if I grab this, for example, and copy all of this and drag this across for you, I see no reason why something like this couldn't be on the cards for silver, assuming we can break out of our current range. So as ever, like I said, one day at a time, and we'll see what the market can give. But for now, I am as bullish on silver as I could possibly be, and have been for a very, very long time. If we can get out of this downward sloping red resistance line, I do think the top of this range test will come, which I've highlighted in blue. And like I said, if we can break out of there, then I see no reason why something like this could not unfold. So if you found that interesting, if you are interested in seeing how I deal with markets in real time as a pro swing trader on my YouTube channel, then like I said at the start of the video, you can find me at Camel Finance. Massive, massive thank you once more to 365. I hope this video lived up to your expectations, mate. And in the meantime, look after yourselves, everyone. Take care from me. Cheers. Bye.